What is up, everyone? It's Thomas with Real Broker here in St. Augustine, Florida, coming at you live every Wednesday at 8 p.m., going over the market stats, the news you need to know about, everything about buying, selling, or investing here in Northeastern Florida. And we're also doing a Q&A. So if you have any questions about any of the market stats I cover or any of the news stories I cover, let me know in the comments below. Seems like we had some technical difficulties on our last one. I'm extremely tired of the software. It seems to be doing it every single time I hop on here. So probably going to have to revisit that. But hopefully we are live now and you guys can see me. I'm going to run through quickly what I just covered, and hopefully we'll continue the show with no interruptions. So let's just take a step back. All right, so as we always do, we cover the market stats, then we go into the news from the national level to the state level, then to our local level. But what I wanted to do, and we're going to tie this in with the news stories today, is take a look at inventory. So we've got 9,597 homes on the market, down 6.6% at this time last year, which is nothing crazy. I don't ever think we're going to get back into this market here where we had 3,000 homes, 3,600 homes for sale with roughly a population of 1.5 million people. It's insane. But we obviously have seen inventory climb drastically. But the one thing I wanted to point out, and this ties in with our news stories later, is we started to see inventory decline pretty significantly from the middle of May down towards the end of the year. And that's not anything special normally, because typically that happens every year. You can see valleys pretty much everywhere here, and you can almost guarantee that's going to be like October on, where the inventory start to come off the market. Because at the end of the day, not a lot of people want people running through their house during the holidays. And outside of that, it's just not the ideal time to move. But we saw that happen much earlier this year in 2025, where that started happening in May. So if you look here, you can see we have October, things start to fall off. We have October, things start to fall off. October, things start to fall off. October, things start to fall off. And then this is a little bit different because this is COVID, but October, things start to fall off. So we have a history of what's happened here, but what we're seeing here is our active inventory actually outpacing what we're typically seeing on the typical year, right? Now, the way to think about this is we have two extremes, right? Let me switch back here. We have the low lows of COVID, right, where there was nothing for sale in the market, and then the market kind of reacted to that. So now we've seen that extreme, kind of that pendulum swing back up. And now we're back around kind of what the baseline is here, around 10,000 homes for the area. So will we continue to see that happen as we go through the end of the year? I imagine that will continue to happen, yes. But what I do expect is for a lot of these homes to come back on the market in the beginning of January. So I imagine we'll actually have an inventory pop at the very beginning of January, where typically seasonally we wouldn't really see like a huge increase. So like here we can see in 2024, not sharing my screen. So here you can see January, a little increase. We have about 600-700 homes come on the market right here. December to January, about 200 homes come on the market. So I imagine that we'll see a pretty significant increase in the beginning of the year when the market starts fresh. So see here. Okay, guys, we're live. Sorry, I'm not sure if you guys were watching this before and got cut off. This streaming software is killing me. If you're here, let me know. Let me know where you're watching from. Appreciate you guys being here. Sorry for the technical difficulties. It's as frustrating for me as it is for you. So let's tie in that data point to the news stories here. Let's go ahead and hop into it. So if you don't use Redfin's one of my favorite search platforms, because at the end of the day, they provide a ton of data. And a lot of the data I use in my YouTube videos because it's just really good. But Redfin predicts major mortgage rate movement. The real estate technology company sees movement in the housing market amid data that is proving difficult to track. So I read through the article, and honestly, they didn't say like we think it's going up or going down. They just said they expect movement. So mortgage rates may fluctuate amid Fed chair uncertainty and limited economic data. Major labor statistics will be delayed in December 2025 due to lingering effects from government shutdown, and home delistings increased in 28% in September, helping to stabilize overall home prices. So that goes back to our chart, right, where it's saying here home delistings, so homes coming off of the active market, increased 28% in September. We saw that started to happen in May, right? So we've seen a huge increase, and that's different than every year. what does that mean for the future? I do imagine, and they say statistically here, that 1 in 5 homes go back on the market whenever the new year comes around. So I imagine that will happen, but I imagine it'll probably be more than 1 in 5 homes here in our area. But this is a national news story here. So the one difficult thing is that we don't have certain data points, right? The Bureau of Labor Statistics is supposed to put out their jobs numbers, right? But because we had a government shutdown for like a month and a half, we don't have those jobs numbers. We also don't have the inflation reports. All of those things should be coming out in the next couple weeks, but we don't know what that's going to look like, right? But what we do have is ADP. ADP, they put out their own private study, but they were expecting 10,000 plus jobs across the country, and it actually fell by 32,000, which is led by steep small business job cuts. So that's obviously not ideal. And from this past year, we've had some big problems when it comes down to the jobs. The Bureau of Labor Statistics have had to redo their jobs numbers several times, and sometimes it swings of hundreds of thousands of jobs in the negative this past year at least. So that's becoming a bigger and bigger worry for the Fed. And the Fed's mandate is to take a look at inflation, which has been around like 2.8, 2.9%. It's been kind of sticky around there. And also take a look at jobs numbers. So we've not had a great run with jobs, especially with the jobs forecast changing month over month this past year, and by a ton of jobs. I think it was almost 1 million jobs in the past year to the negative. 1 million jobs that aren't there anymore. So not ideal. So the Fed is kind of backed into a position, well, at least many in the market think that they're backed into the position where they need to lower the federal funds rate, where originally a month ago, Jerome Powell was like, yeah, we're probably not going to do that for December, right? But now we don't have the data, right? We don't have the Bureau of Labor Statistics data on what's happening with the jobs. Are they going to wait to make a decision until that comes out? When will that come out? I don't know. Will it ever come out? Maybe. Who knows? But either way, let's go on to the next news story here, guys. Any questions about that? I know I threw a lot at you, but I think it's important to know. But let's go on to the next news story here. I only got a couple more for you, so that was the biggest one I wanted to really cover. I know I do it a lot, but so we were just talking about inventory. Jacksonville's residential pipeline swells to over 6,700 units as developers target key growth corridors. So that's a huge amount, right? Jacksonville approved 6,753 single-family units across 21 projects since September. Diamond Timber Trails Phase 2 brings 1,470 West Side housing units. 5 new subdivisions totaling 2,649 units received approval since November. So these are all coming to the area, but what they're saying in this article is that the majority of these projects are going to be in the West Side, to infill parcels established in established communities. This is all going to be in the West Side of Jacksonville. They have a couple others. This is all approved in the West Side as well, Diamond Timber Trails, all that kind of stuff. They have a couple others on like off Kernan down here, but the majority, like I think they just said right here, let's see, Diamond Timber Trails is going to be there, and then you have Villages of Westport Phase 5, and that'll bring almost 700 units here. The project will span 754 acres and 26.17 acres of park space. Now, that's because at the end of the day, that's probably where the cheaper land is here in Jacksonville, because really the south side of Jacksonville has pretty much already been developed. There's only a couple master plan communities in there right now where you can buy a home. So the affordability is on the north and the west side of Jacksonville, and because of they have the First Coast Expressway going in, which is going to connect I-10 to I-95, essentially keeping that west side of Jacksonville almost in like a little bubble between, you have I-10 going this way, and then you have the First Coast Expressway going this way, and then connecting to 95, and then you also have 295 as well. So there's a lot of growth around that corridor, because at the end of the day, it's very easy to get around Jacksonville if you're living in that area. At one point, it wasn't, but now it's getting more and more that it's more congestion now, more traffic, of course, but it's easier because they're putting in bigger and better infrastructure in the area.